I think 2 bars per day, 2 bars per session. So just keep that in mind when you're looking at this. But that's what Doug is talking about. Volume spike on wide range followed by a narrow range bar on low volume. And that, generally speaking, indicates a reversal. And then he says, I'm looking forward to the updated website and the new trading software. I am definitely looking forward to the updated website. Sean is getting started on that this weekend. He's going to be migrating stuff over. I'll make sure that we test everything, well, as much as we can before we switch everything over. And just to let you know, everything will switch over automatically. You're not going to have to relearn login informations. It may take you a little bit of time to get used to the new website. And what I might wind up doing is keep both of them active for a while, and then phase in the new website. But I'm trying to keep the look of them close enough so you don't get overwhelmed with having to learn how to get around the whole thing. Okay, and then Paul was talking about, he was having a hard time placing the buy limit that I was talking about last night. And if you remember, I was talking about how I really thought that we were going to get whipsawed down here, which, there it is, there's the whipsaw. And that if I was going to go long, I would want to see price come above here. Now you have to remember, if the market is down here and you're trying to buy up here, this has to be a buy stop. Okay, so you go into Interbank FX and make sure that your order type is buy stop. If the market price is here and you're looking to sell down here below price, make sure that this is a sell stop. Otherwise, you'll get those error messages. Then I've got a couple of comments or I think a couple of questions from Steve. And basically Steve is asking, well, when on earth do I need to be looking at the market? He's on the East Coast, and he says with the London markets most active from 3 to 10 a.m. Eastern, and 1 hour preparation before the market opens, that's 2:30 a.m. Eastern. When you started out, were these the hours that you work? No, I have always traded in the New York session, which is about 9 to 12 p.m. Okay, those are the hours that I like to look at the market. I'll analyze the market later on in the afternoon, about 7 p.m. Eastern time. But this is trading. This is just analysis. When I was on, he asked, when you were on the trading desk, what hours were you on? I was at the desk by about 4:30 in the morning, and generally speaking, because I was also trading stocks, I would leave, and now this is Arizona time, I would leave anywhere from 2:30 to 3 o'clock in the afternoon. So it was a long day. It was about a 12-hour day, but we had to close out different positions. We had different things for the fund that we had to take care of as far as analysis and meeting with the fund manager and all of that junk. So that's not really what most people who are trading on a retail basis are going to have to face. Really, realistically, I would say you should spend as much time as you can learning this stuff, and you should spend as much time as you can in front of the screens. Can you take 20 or 30 minutes a day in order to trade the markets? Absolutely. However, it's going to take you a little longer than 20 minutes to learn how to trade the markets. Whether that takes a week or 2 weeks or a month or 2 months or 6 months, I don't know. That's going to be up to you and your brain. But the act of trading does not take a lot of time, especially once you have your analysis down to a science. And Steve, hopefully you asked me several other questions, but hopefully those got answered throughout this particular Q&A video. Okay, and that's it. This one was relatively short. Surprising, I had about a fifth of the questions, and